podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness. Welcome to this week's edition of the Hedged Edge. I'm your host, Jeff Eisenberg, and I'm joined today with our RCM Ag Services experts, Jody Lawrence and Ron Lawson. Well, guys, somehow we made it. We made it to the end of the post-USDA stocks report and acreage, and it was a doozy. This is one where farmers across the U.S., they file their intentions with the USDA and document what they plan to do with their crops, how much they're going to grow, what they're going to do with them, etc. And all that ultimately has an impact on insurance premiums and determines participation in USDA loan programs, and then ultimately impacts the market prices. And well, today's report, it was a doozy. It didn't disappoint, and quite honestly left most of us speechless. So welcome to the show, guys. Let's jump in, dissect some of this, and see where the markets are going to take us.
Jody, why don't you go first? I think the grains had the biggest reaction today and are the most important markets out there right now.
Okay. Thanks, Ron. The big news is not so much, the numbers push the price movement, but I can't remember any report, whether it's August or June or January, any of the major four, and certainly today is one of those four, it's probably top one or two, that you have lock limit up trade at the end of the day in both old and new crop corn and beans. And I'm sure I'll find somebody will tell me this afternoon's research that, it last happened during the Eisenhower administration, but it's certainly an incredibly unique day, and to be on the side of it that it's benefiting farmers, whereas we always have this natural recoil and terror about any USDA report at 11 o'clock is, it's quite stunning, and everybody needs to take it for what it is. It's probably the most unique opportunity when you look at going into a planting season that I've ever seen in my career, in 32 years of doing this, to have something like this happen, to lay out a landscape that the world is begging you to do a great job this year. And without much in the way of, really potentially deterring it, because we know what happened last year at the end of the crop, fading in late July and August, and nobody is going to feel safe about whatever happens until this starts getting into the bin, September, October, November. So you've got a long runway on today's numbers, and we'll just start out with the big ones. The big numbers were the planted acreage for this year. The USDA in their February Ag Outlook Forum, which is when they get together with their economists and they put out their spreadsheets and balance sheets from just from a monetary projection of what they expect to happen. They thought there'd be 92 million acres of corn planted and 90 million acres of beans. Since then, every private analyst has been sending out acreage surveys to their customers, trying to dig around and see what we can get. I'm fortunate, the people that I talked to through Helena and then through all their suppliers at the high level of the seed and fertilizer businesses about where their sales were, what was going on, that we were able to, to see some numbers. And then when the estimates of everybody came in at 93.21 million acres estimated for corn, that initially was, wow, that's above what the USDA told us in February. So that number probably leaned a little bearish. And then the 89.996, so let's just call it 90 million acres of beans on all the private estimate average, came in right at what they told us. So it was interesting going into today's report what we were expecting. And then after the meltdown Monday and Tuesday, Monday and Tuesday in price that took us back to, a couple month lows and even lower in a couple of the old crop positions, that you were really worried the attitude of everybody in the market was just terrified that USDA wasn't going to allow 465 December corn and potentially $12+ November beans to stay in place. But the USDA did send out their estimates. They sent out their surveys. They got their estimates back. They have some algorithms that they punch into these because they know that the farmers are, they get incomplete data, let's put it that way, because the farmers have figured out there's no point in overestimating what you're going to plant because it only is detrimental to the price eventually. And so they try to figure it out. And the thing that I noticed and I wrote about was going into this, the last 5-year average for corn and beans, total planted acreage, which to me was always the total that I was kind of battling with what some of these really bearish people were talking about. They were talking about 184 million acres of total corn and beans being planted. And I talked to everybody who knows about the soil, about the logistics, and about getting those getting that such an enormous total planted, which would be an all-time record combined. And they said you would have to have perfect everything to get to 184. So whatever the USDA told us today, which ended up being 91.1 for corn, 2 million below estimates, and 88.6 for beans, which was 1.4 below estimates, was if those numbers were high, which obviously they were not, there's still a finite number of corn and bean acres that can be planted just logistically. And if you look over the last 5 years, that total has averaged somewhere between 178 and 181. We've never even gotten close, even in the big number years when you're talking about after the 12 drought, 13, 14, 15, when prices were at or near these levels, you still never got that type of acreage expansion, simply because logistically it can't be done. And then when you get today's number come in just a shade under 180 million acres, that gives me confidence that that number still can't go up a whole lot. I believe that it will, because I think December corn is probably on its way to $5 just to motivate everybody to do it. But you're just in a interesting position that the USDA's numbers logically make a lot more sense than some of the other estimates we've seen through the years of just huge acreage expansion when you physically couldn't do it.
Couldn't do it. And that's it's real interesting. You bring up all that, the planting, the numbers that are down, because one thing that kind of also popped out to me in the report, just to add to it, was that in general, as a result of corn and beans being lower, the total principal crop intentions across all crops was also down versus 2020, down versus 20 really even the 2016 to 2018 average. Karen Braun from the Reuters, who published that earlier today, the average across 2016 to 2018 total planted acres or principal acres was 318 million. Today, 316 million across all crops. So, we're down below the average, and you have to go back and really, like you say, to those bull years, to before 2012, to see numbers that are even lower than this. So really interesting.
And the only one really is the winter wheat acreage, and then the all wheat acreage number was 1.4, 1.5 million acres above estimates. So that tells me that when wheat was much higher priced about 2 months ago, or back in October, November, when they were double cropping it behind what they just harvested, or putting it in the ground behind their corn for the double crop beans this year, was that price was attractive enough that they wanted to participate in it. So, but you're right. That's other than wheat, it is interesting, and I'll be curious how this is reset in June to what the numbers actually look like. Of course,
higher prices continue higher. People are going to pull acres out of the woodwork, right? You're going to be planting corn in my front yard, right?
You would think that, but this is historically where that number shows up. And I don't know what I don't know what $5 December corn might do, because my great aunt and uncle had a huge amount of grass on their farm. They had this huge yard. We'd, family reunions, and we'd get together and, play baseball and badminton and just have a big time with the kids.
Field of dreams.
Yeah. And I guarantee you, my uncle right now would be thinking, he'd be telling my aunt, well, maybe we can cut back a little bit this year so I can plant about another 2.5, 3 acres of corn.
Yeah.
So no, I completely, the June number is going to be very telling. And it's also one everybody's going to have to be prepared for, because I want to be more hedged before we get into that number, in case we get the exact opposite reaction on the June report as we got today.
That's great perspective, Ron. What any thoughts you have on the grains there? I know you're a follower, a study of all markets. It's truly an interesting one.
The way I'm looking at it, you got to examine the methodology of the USDA. They take the first 2 weeks in March in their polling period, and when you go back and look at where the market was during that time, and you were basically sideways to higher, the grain market looked very supportive. So these numbers would seem pretty valid on the grain side, but yet during that same period of time, the cotton market was getting eviscerated.
Right.
And so we view it on the cotton side of things. The 12.1 million acres in cotton is at the low end of expectation. And when we go forward, there's not a lot of cotton on the ground just as yet. And yet here we are, lock limit up on beans and corn. Maybe people that have the choice. Not everyone has the choice, but those that have the choice are saying, well, I'm not in the ground yet. Maybe I'll try corn. I'll plant the front yard in corn and not go to cotton this year. So we're very skeptical that you're going to get 12.1 million acres under cotton right now. The other thing to consider in these numbers, it's imputed that 56% of the U.S. crop will be planted in Texas. All right, more than half of the U.S. crop. Texas is currently going through an epic drought. Growers have to dig down 3 feet to find subsoil moisture. And so what you're banking on is more than half of the U.S. crop going into acres that are experiencing a decade's worst drought. What are the chances that you're going to get ideal conditions to turn that into a big crop? Last year on this day, we had a 13.7 million acre estimate that we actually harvested 8.7.
Right.
So here we are at 12.1. Where are we gonna come out the other end after abandonment, after drought, after no emergence? We say this, not trying to make fun of them, but the farmers in Texas are really good for planting for insurance.
Sure.
They know how to get the crop in the ground properly insured so that unless they get ideal conditions, there's no emergence and they get a check instead of a crop. Okay, I'm not saying it's bad. They're just really good at it. So you'd have to take into account what's abandonment going to be, what's prevent plant going to be, and no emergence going to be. And from this point forward, it would seem that there'll be fewer acres to produce a crop. And then we have to factor in the La Nina event.
Yep.
And so from our perspective, on a comparative basis, we've had this discussion before on the soybeans. The guys that can switch in the Mid-South Delta, they can switch to beans. There's a much higher profit potential in November beans than there is in December cotton.
Right.
In Texas, where it's cotton, or maybe some sorghum, historically they've been able to sell their sorghum projected out at a basis level under the December corn price. This year, it's at a premium. The basis is above the December corn price. And when you look at input costs and what they can produce, if they can't get a cotton crop in, maybe there's a way to get a sorghum crop in with December corn up at 477 and a basis above. That's a pretty good bet. So our opinion is that the crop, this number, this 12.1, is setting a cap on production for the U.S. Coming up this season. And we would have to say that chances are more likely than not that we will not get that in the ground. So now we look at the supply side being questionable. And then, of course, we revert to what's demand going to be as the world comes out of the COVID coma. And it just as Jody was saying, it's a compelling argument to, grow as much as you can. That's going to be the same situation we think in cotton. We just don't have the acres that you guys have for corn and beans. So
at 80-cent December cotton, what is your I guess your bottom line, your net margin on what a cotton producer is making at 80-cent cotton with normal input costs?
With cotton, so much of it bases on yield. I'll give you an example. So in California, you're averaging 3.5 bales,
right,
to the acre. In Texas, if you get a bale, you're happy. You're happy with that. 500 pounds. Some guys get more, some guys get less. They really will abandon it under half a bale an acre. Anything over half a
if they
bale.
have irrigated, right? Irrigated or dry land, but you're assuming mostly dry land.
Yeah, the dry land is the one that's going to be focused on. Although they did have a water survey and showed that the average drop in around Lubbock, the average drop in the aquifer was 1.3 feet with no resurgence. So even the guys pumping water, it's going to be a partial irrigated. It's not going to be all irrigated. It's going to be partially irrigated. So that affects yields as well.
And people out there still remember the days when they used to just stick a pipe in the ground and water sprayed out like oil, but that's not happening anymore.
Not anymore. So to answer your question, we farm, when you take into account the farm program, the insurance, where these guys are backed up against, anything over the 78, 79 cent level, these guys are starting to really make a difference in their profits. Okay. Between basically 79 and 72, 71, it's the same. Their profits for the end, when you look at the farm bill, when you look at what goes into storage, et cetera, it's all the same. So really from here on out, with 80-cent cotton, you're going to be making money, and normally would encourage acres. But when you look at in other areas, for instance, I'm looking at November beans they're locked at 12.57. I don't know what the synthetic was on that today.
I just did the math at 12.50. If you take off basis at a 55 bushel yield, using what I consider to be very high input cost at $500, you are anywhere between $150 to $200 an acre of profit, making a 55 bushel yield where you can sell it right now. And to me, that's awfully tempting, as opposed to, it sounds like the headache, especially for my friends, in the Delta around here that can pull out a bean header or a bean planter just as quickly as they can pull out their cotton.
Right. And
I mean, Ron, your normal number is 12-1. I mean,
12-to-1 ratio, right?
Yeah, ratio.
Right.
I mean, $1.04 cotton. I mean, you got to.
Right now, $1.04. And again, I don't know how high it actually synthetically settled, so probably higher. And there's always the argument that comes back, and just to be cognizant of reality, if a guy's got a cotton harvester, that's $250,000 sitting in the barn. You want to use it, right?
He's going to use it, yeah.
And if you got a cotton gin that you have to, cover your fixed cost, well, you got to have some acres to run through there every year. So there is that push and shove, that comes along with it. But that said, if you're just sitting down penciling it out, cotton's going to have to do some work to get in the ground. And it just those guys that have the choice. Again, that's a big F. If half of the acres are going into Texas, where they proclaim all they can do is plant cotton and nothing else, not really true, but that's their claim. We got half the crop going into a drought. That's rolling some dice.
Jody, you mentioned weather, and also you mentioned the Delta. So the Delta's been soaked, saturated with water here. Talk to our contacts down there. They actually are showing cotton seed purchases a little bit higher than normal. And they're also getting a little bit of pushback in terms of how much corn they're going to be able to get in the ground here because of how wet it is. Do you think that might have a little bit of a benefit towards cotton just in that region versus corn? I know beans could also go in later down there too, but just wanted to hear your opinion.
Yeah, beans would be the fallback crop simply because of the faster maturing varieties. They can go all the way down and probably get a pretty good yield at a low group 2 bean rather than a 100-day or 105-day corn. But it is so wet down here. And the crazy thing now is I can't remember the last time we had an Easter freeze. And tonight and tomorrow night it's supposed to be in the mid-20s. And of course, Good Friday and Easter Sunday, it's been 10, 15 years. So it's for April 1st for us to be in the 20s. And obviously, if it's 25 in Nashville, you can get into North Alabama, Georgia, and Mississippi, and it'll still be freezing for the next 2 nights.
Right.
We're not off to a good start. We're slow on everything because we could ship a lot of our water to Texas and we'd never miss it.
They love it. They'd love it. I'll tell you the other issue that a lot of the cotton guys we're starting to hear anecdotally around coffee shops in the South is, you put all that effort in, you grow yourself a great cotton crop, and man, the last 3 years, the hurricane season has just beat us to pulp. And it's so discouraging, right, for these guys. They put in all the effort, all the inputs, everything looks great. You got all your planning, and then now you don't have a crop. Well, if you look at, to just throw salt in that wound, what if a guy's gone ahead and hedged his crop at a lower price?
Yep.
Mm-hmm. And now he doesn't have the cotton.
And it skyrockets in price because we lose it.
So, that's a lot of the discouragement we're hearing. And we'll see. Again, the cotton seed sales are up. That's great. I mean, more cotton for us is more to hedge. That's fantastic. That's what we do.
Right. But also your point of that real quick, Ron, is why we've not been recommending selling futures and directly hedging, because there's so much unknown. Put floors in place, let the markets continue their path upward, but protect yourself in the same light. Yeah,
price insurance. You always buy crop insurance, buy price insurance, and not be locked in.
Jody, looking ahead a little bit here, your thoughts on weather impacts, and we've talked a little bit about South America's harvest, in our last podcast. Just kind of finish out here. What are the biggest risks to the market that could cause prices to go one way or the other? I mean, I know we talking bullish here, but bearish news that could take it south. I mean, we've talked maybe China, ASF. What do you think?
Yeah, several different factors. Start with South America. Argentina's harvest is moving along because of the dry finish that they had. Haven't seen any dramatically lower or higher yield estimates, coming in from early harvest. So we still think there'll be some yield loss, but we just not enough that later, a month from now, once we have an idea how U.S. planting is going, what's happening in South America will become a bigger issue, because if Argentina's corn yield gets trimmed and the third season safrina crop in the Mato Grosso area that is really, really, really
What's
dry
it called?
central.
Safrina sounded like you said sangria.
No, that's after we're done.
Okay.
I don't know. Today may be a Pappy Van Winkle day, because I guarantee we're not going to get this opportunity very often. But if Brazil's third crop, which is historically where all their exportable supply comes from, if they continue to suffer through this and they're 5% below trend line, you don't even need that. If they're 5 to 10 bushels off their trend line, then with what we found out today, for whatever reason, let's take them as they are, that the corn number doesn't change dramatically from 91 million acres, South America could have a very positive outlook on where we go, because that will work its way across the board, because it'll directly impact old crop, what the world has available, when we get to August, end of August, early September, available for anybody to buy. And then it puts all the more pressure, if their crop has some problems, on what the U.S. does on what's going to be available until South America's crop is harvested, next February and March. So we're in a pinch on that. China begins and ends with African swine fever.
Yep.
We are all over the board on some of our private analysts, what they're telling us, what the public people are telling us, being the USDA. And we know that we can't trust the Chinese people to tell us the truth. So we have to somewhere, feel around in the dark for what's going on over there. If they're not having a problem and they have figured out a way to at least keep it mitigated, because we know ASF's always going to be around over there, where they're not losing 30% of their hog supply, which ultimately becomes about half the world's supply, like they did in 2018. Then we have the feed demand and the short world crop story. But if ASF comes back with a vengeance like in 2018, you can wipe out what happened today very quickly, just simply because of the loss of the short-term demand. That, think about what happened where we were sitting in September, as they were repopulating this hog herd to get back to pre-ASF levels. From September to December, they bought everything that the world had in corn and bean meal. If that is reversed and they don't need that for 6 months, then even today's bullish numbers, acreage numbers, become bearish, because we simply don't have any, our demand driver backs out of the market. So that is, and it's one of those things. They're in a lot of gray area here. It's either going to be really, really good, or it's going to be really, really bad.
Right.
And that we won't know. And there's no. And the only thing that concerns me right now is internally, Chinese bean prices, bean oil prices, bean meal prices, and corn have fallen off from those highs that they kept posting day after day after day, up until the middle of February.
I think we got to watch out for it. I mean, we've heard some reports from people, some of our own guys, Simon and Tom and Kevin, that as many as 8 million sows ultimately need to be culled here as a result of ASF. Had another report come through that internally people are pointing out that it may be as bad as 2019 ASF, where they lost half the herd. So to your point, everyone needs to be aware of the risks to the downside and prepare for that just the same as they need to prepare for the upside, locking in those margins and profitability of their operation, but then price protection, as Ron noted, and price risk management. We're going to need that magic hat of yours that you have in your head to tell us where to go moving forward.
I only bring it out. I feel like if I wear this every day, and for those of you that can't see this or are listening through your podcast and not visual, there's a bull and a bear on this hat. And always it when I put it on, more good things happen to the markets than they do bad. So I don't try to go to the well too often, because I realize that I don't. When I retire, I'll wear it every day, but I don't want to wear it out till then.
I keep wearing it. I'll tell you the one thing we're watching on the negative side that could throw a curveball. We talked about the supply. We talked about the demand. Okay, we counted all the bales on 2 hands, and now the U.S. dollar turns around and keeps going higher.
Great point,
That's
Ron.
the one thing that could really come and hit us from behind. You know, you look at what's happened to the dollar index. It's been in a long-term downtrend. Now, though, with rates changing, the Fed maybe not being quite so dovish, the concern is that the specs are going to reverse their short dollar position. And should that happen, it just makes all of our stuff that much more expensive to the world. So that's one thing we're watching. It's not a deal killer, but it sure throws a wet towel on the party. So that's something we need to watch. It could be that we have inflationary pressures that supersede all that. And that's what I always say to my guys, like we can talk about the cotton market. If we're talking cotton, here's what we got. But if you want to talk about the things that are going to affect the futures market,
right,
we've got a whole nother drawer to reach into.
Never forget about interest rates and the dollar. Yeah.
Watch that. That's one thing we're worried about.
And one thing I did see, that one of the major Weather Bureau world forecasters out of Australia called La Nina over earlier this week. They said that the water temperature had gotten back to a neutral. So apparently, at least for the next little while, we're neither La Nina or El Nino. We're just right in neutral position. And historically, it's hard to come out with a hard conclusion that, that equals X amount of rain or lack of rain in the spring for the U.S., or too much or too little, hot, dry during growing season. So right now,
there's no normal anymore. You're
right.
The average is made up of extremes, and that's where we seem to be, is extremes, one or the other. We don't come in the middle anymore. So
it sounds like politics. What are we talking about?
Yeah.
We talking about cotton and corn, or are we talking about Washington?
Oh, cry uncle on that one.
Well, gentlemen, it's been a great day, and great day for farmers. I think, Jody, you said what was the number? I just got to throw it out there. You said $7 billion in added value to American farmers.
$7 billion in between the total of all the wheat, corn, and bean crops that are either in the ground or about to be planted. And this doesn't include old crop that's still in the bin. The value of this year's crop went up about right at $7 billion just for those three.
Great day.
And that's more fungicide, more seed treatment before you get there. There are a lot of ways to increase your yield with these extra dollars, but the only way to be sure you're doing it is by making some sales and doing some hedging, because last thing you want to do is spend more, and then we have a 2019 repeat during all the flooding in the Eastern Corn Belt and the huge prevent plant. Corn got to, I think, 470, 475, about where it was before this break. And the next thing, everybody's thinking $5. Next thing you know, they're selling a whole bunch of it for $375.
Right.
Yeah.
So.
Well, keep, everyone here, just as a reminder, you can reach out to Jody and Ron direct. You can get to our website, rcmagservices.com, and sign up for their research. Reach out to them to learn more. And Jody does a great job putting out recommendations on his trades and percentage sold. And, we're going to continue to start legging into this trade. And Ron does the same. It's for our cotton customers. I think we're about 20% price risk managed right now, not sold, but we got a hedge on to protect ourselves to the downside there. So, appreciate everyone's time here today. Appreciate you guys, always being on top of these markets and sharing the news with the group. So, thanks again for everybody today, and we'll see you the next time after the next report.
All right.
Thank you, Jeff. Thank you, Ron.
Listening to The Hedged Edge. Links from this episode will be in the episode description of this channel. Follow us on Twitter at ag_RCM, like our Facebook page under RCM Ag Services, And visit our website, read our blog, and subscribe to our newsletter at rcmagservices.com. If you like our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear them.